perform.
Thank you so much.
You're an amazing human being and an amazing stock picker.
Always a total pleasure and delight.
Concept. Yeah, hi. Welcome, guys, to the 21st edition of FINtastic Talks. It's great to have all of you with us, and thank you for all the love and support that you have been giving to these talks. It keeps us motivated, it keeps us going. We hope that we are adding value to your lives and we are helping you achieve more. And that's the whole purpose of this talks. So today, as you know, we flip between investments and insurance and health insurance. So today we are going to flip to life insurance, which is a very interesting topic because we have realized during the pandemic the importance of life insurance, and life insurance has seen tremendous claims happening, and due to which the term insurance and the protection rates are going up. And at the same time, life insurance industry in India has also pivoted. Like earlier, the products were not very customer centric. Today, they are very, very customer centric products, and which are giving very attractive returns. So some of the new generation of non-par products where you can see an IRR, they're giving you an IRR of more than 6%. So today, these products are actually better than a bank FD. They belong to your debt allocation of your portfolio, but they can give you a very, very good long-term secure returns for some of your goals for which you can't afford to take a risk. And at the same time, you get 10 times of the premium amount as a life cover, which is an additional protection. And on the term insurance, which is the pure play protection products, today, you have coverage till the age of 99 or even beyond. So these are almost like whole life covers where you can use for legacy planning, or another way of not being able to spend your money and keeping some money aside for your families. I would like all of you to be very inclusive. So please do write on the chat, do write on comments, we can read them. We like to take up your questions. And I'm very excited on this special 21st edition. We have a very amazing guy with us called Tarun Chugh, who's known as the growth guru in the life insurance industry, because wherever he's gone or whichever role he's played, he's brought tremendous growth in that role. And he's done the same thing for Bajaj Allianz. And if you track the Bajaj Allianz life insurance, you have seen the kind of way it has scaled up. And it's all due to one man, Tarun Chugh. So without further ado, let me welcome Tarun to the front of the stage. Tarun, thank you for taking out time to join us today.
Visible? Yeah. Thank you so much. That's a new one, Growth Guru. 2 Gs.
No, but that's exactly... So Tarun, we have known each other for such a long time, but whenever there was any place where there was a growth required, everybody was used to look up to Tarun Chugh and bring Tarun in. And what you have done at even Bajaj Allianz has been phenomenal. So you are truly the growth guru of this industry, and so which is very nice.
Thank you. Thank you so much. Thank you so much. I can't shake hands with you, so I'll just do this.
Nice. So, Tarun, this is a typically slightly different format because here generally all our talks are all about investments, products, what are we doing. Here we try to understand a person also, and we have a lot of youngsters with us. We have a lot of people from our clients' families and others who are looking to build a career, or a lot of young professionals who are looking to grow and they aspire to be a CEO one day. So we also do spend a little bit time on the person, his background, what has helped shape him. So Tarun, tell us a little bit about your family, childhood. I know we have known each other for so many years. I've never asked you this question, but just tell us about your childhood and about Tarun's family and what defined him.
Okay, thank you so much. First of all, it's a pleasure, Sanjiv, to be with you. I have 2 Sanjivs now in my life. One anyway, Sanjiv Bajaj, Bajaj FinServ, and now you here. So see, I am from Delhi. Although I can't say that too long because last 27 years I've been in Bombay now, and Bombay and Pune the last 4 or 5 years. But I was born and brought up in Delhi. I'm a Janakpuri guy. If you people who live in Delhi will understand that. Middle class family, middle class values. Both my parents used to work, and we needed a double income. India was not necessarily uh, the best place in terms of wealth generation at that time. Uh, there used to be princely salaries, which used to be in hundreds and only a few thousands maybe. Uh, and I have a younger brother, and my memories of the past is, being a very responsible elder brother, uh, and I used to carry a big gucha of chabis with me. I used to be the guy who used to come back from home, my brother holding my little finger, getting him to cross the road in Janakpuri, and then I used to open the locks, and we used to spend time till my mother used to come back from work. And of course, we used to have a lot of fun at the same time. Uh, I My first time I tried to do something about my career was when in school. So I'm from Mount St. Mary's School. I know Sanjiv, you're from DPS Arkepuram. So my bit was that we were in the parade road, which basically meant lots of people were from the armed forces. So my first love was to get into the Air Force, but for some reason it didn't happen, and it was my first, so to say, earmarked failure in life, and I have lots of failures which I have learned from. So behind what you say, growth guru, there's a lot of stuff that was happening which he felt was not really growing him much, but it grew me as an individual. But this time, you don't think about these things, as growth, but you go through tough times. And I used that as a pivot. And I got into doing engineering then from IIT Delhi, and did my MBA from the IIM at Lucknow. And in the midst of all this, I met my friend and later my life partner, Simran. And she's also from Delhi. She's the South Delhi types, if I might say. The Delhiites know it. So, and together now we have two boys. Both of them are, one is 23, the other is 18. Both of them are in the US. And both of them are now, one is already a computer science graduate. The other is trying to go the same way. What has really shaped me in terms of being where I am today, I would say, is the 4 or 5 crises that I've seen in the financial markets, and because I chose to be in the financial markets. So there was a 94 crisis, which was the Harshad Mehta crisis. Then there was a 98 crisis, which was the Asia currency crisis, if you remember. Then there was a 2001 where the World Trade Towers came falling back. And then there was, of course, the housing market crash in the US and Lehman Brothers 2009, and now the COVID crisis, which all of you are also going through. In the midst of all these crises, I've basically developed my career from crisis to crisis, is what I used to say. And I started my career in a startup, which was in the equity markets. So this was a subsidiary of UTI. UTI was starting up a new company. So the CEO, Mr. Khanna, and we were 4 or 5 of us who were fresh MBAs and one chartered accountant who set up that company. So that was possibly one of my best times in my life in terms of growth.
Tarun, what was this company called?
It was called UTI Securities. Still there, I think.
Okay, yeah.
Yeah, so we were the founding team of UTI Securities. And very soon we became, number 2, number 3 in the stock markets after people like DSP and Kotak. In private equity, I started the private equity sell side there. And we were like top 3 in the private equity. There was Peregrine. You would know these names, Peregrine and SSKI, and UTI Securities was number 3. So I started up the private equity desk. And then I moved. And so I was an investment banker to start with. And on one such crisis, the 2001 crisis, is when I lost my job. I was in BNP Paribas, where part of the UTI securities team had joined. And after the world towers came crashing, uh, investment banks were shutting like left, right, and center. And BNP Paribas also shut down shop. Like many other, there were 11 of us who actually shut down in a week's time. So I don't know, the Europeans and Americans take the call at the same time to shut down, or what happens. So we were called into a big room with a lovely large mahogany table, and we were all getting calls since the morning कि भैया आप लोग तो बंद होने वाले हो. So we were called, and there was this gentleman, my global head of investment banking, Patrick Rundu. I still remember that name. And he, in broken English, he told us that we were told to go. He told us about the golden parachute, which was good money actually. But we told to keep our car keys. We are paid very well. Car keys and your mobiles were taken away, and laptops were shut. The office was shut. We were told to just step out for 2 hours, 3 hours, come back. Because as an investment bank, that's how it happens globally. You just shut shop entirely. Once you're out, you're out. So, because there's a lot of client information. So that's how, and then for 3 months, I did not have a job. Because nobody was hiring
Must
in
have
India.
been tough, huh?
Yeah, but that was possibly when I look back. It's not, I would not wish people lose their jobs, but those were the years, those 3 months and subsequently a year, were the ones that made me really tough, made me take risk, gave me the capability to handle pressure. And I think that's the ones that really made me. In fact, after that, I shifted to the life insurance sector where I still am. I didn't find a job, by the way, in India, so I had to shift to the UK to sell software, because software luckily was still moving that time. And I realized that UK was not the place to be in. We enjoyed ourselves. We really enjoyed ourselves. I learned how to swim at the age of 35. I never knew how to swim. My son loved UK. I had one son then. But then I realized that it was not the place I had to be. I had to come back to India. And when I came back to India, I joined ICICI Securities and had some phenomenal private equity transactions that we did. But my mind was made that I had to get into something that different that I wanted to do. And I wanted to join a startup sector. Life insurance had just about started up that time. And then Shikha Sharma, I got time to, get her to see me. And she hired me into the life insurance sector. And I was an ICICI Proof for some time. I became the chief distribution officer. That's where Sanjiv, you and I met. And Mr. Sandeep Bakshi then was a mentor to me. And I told him, sir, I want to become a managing director. आप हैं यहाँ तो मैं बन नहीं पाऊंगा, तो मैं बाहर जा रहा हूँ. So he helped me actually find something. And then I became MD and CEO at PNB MetLife. And out here then Sanjiv Bajaj, the other Sanjiv Bajaj in my life, called me. And then since then I've been here.
Yeah, that's superb. It's a very inspirational story, Tarun. Like, a lot of people who are watching, all lives are full of up and down. And I think it's the persistence that makes you successful. And whenever we go through a crisis, we feel this is the end of the world. But at least what I've seen is that every crisis makes you better. It makes you sharper. Like even at Bajaj Capital, we had been in a slightly limbo in the sense that Bajaj Capital was there. It's a big company doing well, but I think the COVID crisis jolted us. At least for me, I've not worked as hard as I've done in the last 2 years. And today, I feel we have transformed Bajaj Capital right into we are at a very high growth path, new technology, very excited about things. It's a very young, energetic startup culture, so many new things happening. So I think, and when you look at those things, you feel, yeah, these dark clouds are not going to pass. But then whatever comes out, the silver lining is always better. And I think your story has also proven that. And same thing is for everyone who's watching this show today. That look, guys, crises are what polish you, as they say, and you will come out. And there is always जो life में हिंदी में बोलते हैं ना, जो हमारे like your mother or our grandmother used to say, beta jo hota hai अच्छे के लिए होता है, that whatever happens for the best. So it actually is true that there is whatever happens for the best. So now coming into our own industry, this COVID crisis has really jolted the life insurance industry in the sense that it's made people aware of the need and importance of life insurance. And all of us, at least we have been seeing so many clients claims happening. And to a certain level, it's very shocking also. Sometimes we are following up for renewals and we find out the client is no longer there, and at least we have seen the number of claims have gone up drastically, and we have been working with the companies to get the claims paid, and I have to say the claim servicing has been outstanding. But so has the life insurance industry seen higher claims, and how do you think this is going to affect the life insurance industry in the short term and the long term?
See, so this is like the calling of the life industry. We are here to pay claims, and that is a simple mantra that I think we believe in, and I think the rest of the sector shares that with us. So we've been standing with our partners, with our customers, even if sometimes reinsurers have not been forthcoming. We have extended our books and we have taken on the claims that we had to take on. Yes, the claims have been huge, but so for example, I'll give you some number. Last year, the entire year, we had 14,000 claims that we settled. This year, in the first 6 months, we settled 13,000 claims. And we've got the next year coming, the half year coming. So I think we'll be closing somewhere close to about maybe 22, 20, I don't know, some number like that. And we are still in the fact that we might see a third wave coming. So having said that, yes, it's been a tough time. It has got us to be clear that we have to be working for the customer. We have all ensured as a sector that we pay claims in time, and particularly COVID claims, we've been very, very clear. And I think it's something that our product has promised. And if we don't stand true to the promise at this point, then what's the point of even buying the product like this? So we've been very clear about it. And from day one, I think when it comes to claim payment, I think the regulator, the industry, and Bajaj Allianz particularly, we've been very clear. To make it as smooth as possible for the customer as well. Not just pay the claim, but pay it quickly and in time.
Yeah, and Tarun, now taking up a product which is the non-par products or the guaranteed products, okay, which I truly, let me build a context that before that there were products where we were used to work on illustrations. An illustration, a person could at one time say anything, that you can get a 10-12% return, show amazing. Then IRDA came out with a regulation saying that you have to show at 4% and 8%. Now, even whether that 8% is achievable or not achievable used to be always very dicey. And but what industry has done over the last 4-5 years is that industry has moved to a non-par products, where they see is the return you see on the product is what you're going to get. And I think, I always give credit to you guys, Tarun. You're amongst the top 3 players of the industry who has brought about this change, along with Tata and a couple of others. But what is your views on these guaranteed non-par products? And there's one of our regular viewers who's writing a question, Madhusudan, and this is something we should answer. It's that Madhusudan is asking a question of a typical financial planner. And Madhu, just for your information, this book you're quoting was written by me, the CFP. If you look at the author, I am the author, but at that, this was a thinking at that time. So guarantee what he's saying is that with they have no liquidity till the life, and with why stuck, why do you get this, why do you get stuck in these products? And also insurance is not an investment. Why to mix? So what is your views on it? I have very strong views on this subject, so I will add my views after you. So Madhu will take your tough question to start with.
Yeah. So see, let me just give you a little background. We were the first ones to start with a guaranteed non-par product, which started selling like hotcakes. This was a POS product, the point of sales product, and this could today also it is like issued in 24 hours. So that was how we started off, and in the POS market, I think our brand is very well established. And then we moved on to various kinds of products, and we have various variety of products now in the guaranteed income segment. And I'm looking at Madhu's Sudan's question as well. It's an interesting question. It's a typical question that would come in that investments are to investments. Why are we mixing it up with life cover? So here is why. Don't mix it up. I'm not telling you to. You are an independent decision maker. But what if getting that life cover gives you post-tax the return more than what you would get pre-tax in another investment? This one does. You have a 1010D benefit, which means that on maturity, there is nothing you need to pay on all the gains that you've got on this product, which all other products are taxed on, by the way. So you have that benefit. And as Sanjiv just rightly said in his introduction itself, that this kind of product today can give you anywhere between 5.5% to 6.5% guaranteed, which while an FD, this is post-tax, while an FD post-tax will give you anywhere between 3.5% to 4.5% at the very best, depending on which tax slab you are. So, okay, don't lock up if you don't want to lock up. I'm not saying you lock up all your money, but I'm sure if you're getting a confirmed 10-year, 15-year, 20-year guarantee, where the risk of reinvestment, which is always there in the stock markets and in the debt markets, is not there. Why would you not put a part of your portfolio in this? I think you should.
Yeah, and I fully agree with you, Tarun. Point is, guys, there are two parts of your portfolio. One is your debt allocation, and one is your equity allocation, and it is also the amount of risk you want to take. Now, you can't, right now, markets have done extremely well in the last 2 years. And this is whenever this has happened in the past, after a bull run, everybody feels that equity is the only investment to make. And anybody not investing in equity is a fool. Similarly, used to happen in the real estate market in the 2005 to 2011-12 boom. Anybody who felt, yeah, real estate nahi kiya, this guy is an idiot. Now, point is, look at what has happened in real estate. There's been no returns for the last 8 years. It's just started to make a comeback. So, look, financial products are cyclical. You need to have guarantees in life. And today the 6% may not seem huge, but after 15, 20 years, it may be, Indian economy may be at 2%. Like, let me take an example. I started my life insurance relationship because I wanted to sell a product called Jeevan Suraksha, which used to give a 12% guaranteed growth and a 12% guaranteed return. And if I today tell you my own policy, it is absolutely crazy. Every year I get a call from LIC saying, "Sir, do you want to get it paid up?" I say, "No." I am happy continuing with the plan because they're giving me 12% tax free. Similarly, there's Jeevan Shri, which used to give 8%, and so many other products. So, guys, today you may not realize the power of this, but tomorrow, if the Indian economy, the way it is growing, and growing economy needs lower interest rates, because only then can the manufacturing and the long-term capital investment happen, and the infrastructure development happen. Please understand that no economy with a 10, 11, 12% interest rate is going to have an infrastructure development happening or large ticket capital investment happening, which is going to sustain the economy. So if India needs to be on a growth path, these rates have to come down drastically to maybe 1, 2, 3%, because that's the kind of returns, that's the kind of rates at which money is available internationally. So these interest rates may not look feasible coming down, but may come down. Plus, you are also getting 10 times of the premium as a life cover. And you're taking these products for some purpose. Like, there is a product in the market where if you pay 20,000 rupees a month for 12 years, you get 50,000 rupees. Now that 50,000 is for your regular income. You don't want to take that risk. That's why you're buying that product. And there can be so many other products. So you have to build a portfolio mix, and life insurance as an investment has one part of it. I absolutely agree. Earlier, there was no role for it because it was truly not a great investment product. But today, actually, the non-par products are great investment products, and I can, I'm very happy saying it on a public forum, and I am personally buying it for myself also as a part of my portfolio. So I think it is awesome, this thing. So Tarun, now coming back, since we were talking about India, and I know I've seen some of your interviews, you're very opinionated about India's future and what is going to be, how this economy is going to be unfolding. Why don't you tell us a little bit about that?
Yeah. So see, actually, first and foremost is what is happening right now, if you ask me. So the immediate trends are this new Omicron. I don't even know how to pronounce it. The virus, the third version
Omicron.
that is coming, Omicron, and this is going to be one interesting phase. I am of the view, although maybe I'm biased, maybe I'm saying it prematurely, that going by the fact that trends that viruses after some time tend to, kind of deplete in their uh, being lethal, while this is spreading a lot more, it may not be as lethal. And the second is the vaccination has been quite good for Indians. I think that is really helping. So I think that is the key, because you have to talk of today. Because before I even talk about the future, this is what is live and there today. So my view is that it'll be not as tough as the second wave. Maybe it'll be a little less than the first wave also, I believe, and that's what I'm betting on. But I mean, I could entirely be wrong. Bets are not always there to be correct. Uh, on a global scale, I think very clearly people are seeing in the US, after a long time, we have negative interest rates. Inflation is 6.5%, which is never expected in the US, and interest rates are nothing really. And so the negative interest rate that is there, I think that will slowly start correcting, because I don't think the Democrats can stay in power with such a situation. When their own base, where their base is actually not unlike Republican, is more upcoming. So that one will result in interest rates, and those will spook the market a little. So I expect some kind of spooking happening. At the same time, I expect another trend of asset inflation for quality assets to continue, which basically means a lot of commodities will keep getting dearer, whether it's gold or whether it's gold, silver, metals, and oil. I expect should, because there is a growth path that the economy is seeing, assuming the virus is not as bad. Currently, it's come down more because of the virus, I believe. So that will be the other underlying trend that will be there. And that being the premise, you will see a lot of things getting influenced. So I expect that Indian markets will remain strong. I expect that this new trend of unicorns coming in, where suddenly you have a lot of billionaires, some 30-year-olds becoming billionaires for all the work that we oldies may have done, but that is happening now. That is happening, and I think that will remain a story for huge inspiration. And currently, the job market, if you see, it's not really influenced so much. I was looking at the numbers. It's 5.5 lakh jobs that have happened because of startups. It is nothing. Because India's overall job market today, if I look at the number of employees, about 40 crores, of course, including the public sector. So this as a sector has to kind of come up. I think that will make one difference. And you will see money flow into startups more and more and getting the risk appetite. And there'll be a time when, holding out a startup, it's already there. Holding out a card of a visiting card of a startup is going to be a lot more valuable than holding a card of, let's say, a foreign bank or an MNC. I see that trend coming in. And which is in a way very good, because the entrepreneurial skill set that is there in Indians is good. And I think that's going to make a big difference. I'm also seeing a trend where today, there's a dhakka gadi happening from the government. The government is pushing. The government is investing in infrastructure. This is the one which is influencing growth. But I expect this to flip over in about 12 to 18 months, of course, depending on the virus, where private spending will also go in, and that will make a difference. But while that happens, a trend which a lot of the liberalists will not like is, you know, the gap between the poor and the rich getting wider and wider. That is something we have to understand how we solve for. Today, 23% of India can be classified as affluent and above, which has maybe about a household income of about 6 lakhs and above. But they are responsible for about 51% of the consumption. The consumption story will get more obliquely balanced towards the affluent, and a lot of the young people will be such. So the data that I have tells me that by 2030, about 35 odd percent of Indians will be in the affluent space, so this will get better. But they will consume 65% of India's produce or whatever we sell. So the consumption story is the next big story, and that trend is going to skew the balance towards a segmented market, and most marketers will be, all of us will be chasing a lot of these. So this will result in the story of many Indias only just getting more and more prominent. I always believe that it's not one India, it is many Indias, and that will make, kind of impact how decisions are made by corporates, how they invest. The other bit, for the next couple of years, I do expect that growth is going to be solid. This year, the World Bank has been quoted saying 9% and above. And the next year, that is 2022-23, I expect a pretty good growth rate of about 7-ish%. So these 2 years will be marquee years for the sector, and I remain extremely positive hence on the India trends that are coming up.
Yeah, very, very well said. I think most beautifully explained. And you have got me excited about consumption. So I keep up with my investments in some of the consumption stocks. But I think it's very well explained. So now coming back to our industry, I know a lot of people join this talk because they want to understand some product or something new, something different. So, Tarun, tell us a couple of products maybe from your stable that you're very excited about. I know always you're a product master, and I remember our conversations on products. And I think, so point is, which are the products that are exciting you at the moment that you feel are great for the, for the people who are watching this show?
See, I'm very excited about one particular segment and hence a product. This is the segment where people are now 40 and above. And that is going to be close to about, that's already, I think, upwards of 40 crores. So it's 40. So 40 crores people are above 40 at least in India. That's a huge market, so that's bigger than the US. And this segment has been, as they're getting to the 40 and beyond, has been consuming, and the consumer story, and they'll keep consuming. But what I think is hitting, and that's a responsibility that I'm also going to talk about, that financial advisors like you and me have, is that we have to cater to this segment. And this segment today finds it difficult to buy mortality products, has issues on medicals and so on and so forth, because somebody or the other always has some medical issue here. And hence my favorite product is the pension plan, and particularly the deferred pension plan. And so I should tell you that last February we introduced our deferred pension plan, and this is again a guaranteed pension, and depending upon your age the guarantee will keep increasing. If you're older, then it is higher. But before I get there, some basic data, Sanjeev, that today there are 30,000 Indians, this number had come from somewhere, are hitting the age of 60. And most people want to retire early. I know they will not be able to retire early because their requirements are getting higher and higher. And usually when if you look at, so I'm talking underlying things why this product is important, why it excites me, and when I think it's a social responsibility of ours to talk about this product, is that if you look at any individual, and some youngsters who must be watching this, I can tell you by experience, Sanjeev can tell you by experience, Sanjeev is a rich man, always. I'm developing my little bit. So as you grow in life, your quality of life starts getting better and better every 10 years, every decade approximately. You take a Philip. So you'll start with a Bajaj scooter, now Bajaj bike, and then maybe you'll go to a smaller car, and then you go to a bigger car, and then you'll go and buy a German car, and so on and so forth. In your time, possibly you'll buy an EV, maybe a Tesla, and this is the time when you suddenly start figuring out that you're about to retire. At that time, you are the peak of your consumption. You are at the peak of your comforts. And you realize that very soon you'll run out of years of earning years, which is the pain point which India has to recognize, and which is where I believe it's a fiduciary responsibility for all of us to be investing and convincing people to invest in the living long story, and living long without income. If I talk about my own actuarial tables, we normally don't share this, but I mean, you're yourself a big product pundit, I would say. And normally, if you look at this, Sanjeev, somebody who's 60 today, a male and a female, a 60-year-old male is expected to live up to about 80 to 83 years. And the Indian female is expected, who's 60, is expected to live till 84, 85 years. So you're talking about, if 60 is your retirement age, you're talking about 22, 23 years, and another one 24, 25 years. It's a big gap. Yeah, you got that already. So a big gap that is there in terms of how long is one going to be living. And that is what is going to singularly become a big social issue for us. And I mean, we used to all, save for the PF. We used to save. We are willing to spend on our pizzas. But what it takes really sometimes when you're young is to invest in two categories of products, which tend to come in this. One is the pension plan, the pure deferred pension plan, and the long-term income plans, which we were trying to explain to Madhu as well, Madhusudan, that this is where the life insurance particularly makes a big difference. So you save for 10 years and then you get for another 30, or save for another 20, and you get another 30. Now that kind of a guarantee, and if you're getting 5.5%, 6% post-tax, nobody can give you. Nobody can give you. And a deferred pension plan today, particularly, can take care of as long as you're alive. So, see, I talked about the India story where, people are expected to live from 60-year male and all that I talked about. But the point is the metros may be even stiffer. You could expect in the metros people at 60, maybe males at 60 living up to 85, 90. We have enough people around us, right? And at your peak of when you've got your driver, you've got your big car, you've got your big expenses, your air conditioning and this and that, you're not going to let that go. And what happens when you don't have any income? So singularly, one single mantra, the deferred pension plan or long-term non-par income plans are the best plans to get into. And if you have issues, you think of competing mutual funds and FDs, and you belong to that segment, and you're totally against life insurance, well, be my guest. But take it from an old man and take it from Sanjeev as well. I'm sure he likes that. That do not miss this bus. Otherwise, you will regret. Believe you.
Yeah. I think very well said, Tarun. For us at Bajaj Capital also, we have always led financial planning, and International College of Financial Planning was set up by us So today all our competitors are trained by us. The point is that, but one area where we absolutely agree with you, we feel retirement is the future, and retirement planning is the big area. And we have created a beautiful retirement planning software. Next time
Okay,
you
good.
come, it's probably another league and level, which where you can totally do your cash flow planning, management, and we are giving it absolutely free because we understand that there is a huge mismatch that is happening. And one thing I like to add on, hey guys, as Tarun said, today older people are not spending less like in the past. ठीक है, earlier they used to be a person used to retire, get into a very conservative mode. Today older people are actually spending much more than they ever used to, because they were at the height
Absolutely.
of their consume, and they don't want to bring down their consumption level, but their income or their spare income is going down. So it is very important to supplement that spare income, and that supplement comes from this long term annuity or the pension plans that you have bought, and that is supplementing. So suppose you have bought a right plan, and at that time it's giving you 2.5 lakh rupees a month. Then you work and you make another 1 or 2 lakh rupees a month. You can have an amazing lifestyle. And that's where this, like when we talk about the term insurance which we are going to pick up, that today term insurance is available till the age of 99 or 100, which is like a lifetime planning. The whole concept of that is that today, that look, if you want to give 5 crore, 10 crore to your child, or even 1 crore, you can just buy a life insurance and make him a nominee, so he gets that money after you, and you can afford to enjoy your money during your life. And we have seen it happening with so many clients, so many people, where I have seen that earlier people's expenses used to go down pre-retirement. Now people's expenses are going up because they want to
Going up.
travel,
Yeah.
they want to go abroad, they want to do this. And I meet families, and the guy is telling me, Sanjeev, I used to spend 60, 70,000 pre-retirement, and my post-retirement expenses have become 2 lakh rupees because my wife wants to buy this. We want to go a holiday. Our annual, 2 holidays in a year is costing me 5 lakh rupees each. So, this whole paradigm is changing, and I think you've got it right. And also, guys, also you have to understand life insurance companies are very huge, very well capitalized, and they are in a very unique position to be able to give these guaranteed plans and these guaranteed annuity plans. So, Tarun, just to understand, your product is a guaranteed annuity or a guaranteed pension? So, is it
It's a
saving for your?
guaranteed. It's a guaranteed deferred annuity.
Okay.
So you can put in monthly modes today or annual modes, whichever mode you choose, and you can defer it by 10 years or 5 years, or there's immediate annuity also. You can take pensions as well. So we have a deferred monthly or deferred annual pension plan where आप 5 साल के लिए डालिए, उसके बाद लाइफ भर के लिए लीजिए, 10 साल के लिए डालिए, लाइफ भर के लीजिए, or 20 years, whatever the combinations you pick up. Because you,
So,
of course, when you take a longer term, you have to invest less.
yeah, Harsh is actually validating. If you look at he's saying, I was always a mutual fund person, but now approaching 50, I'm actually exploring pension plans which give guaranteed income after 10. So, here, let me clarify one thing, Harsh. It is very important because, life insurance industry has a bane also, that it has some unethical people into it. So you have to understand, one is a long-term income plan, as Tarun said, which is saving for that, which is the guaranteed return plans, what we call them. So one is that can be an option for you to take this. Another is called a guaranteed annuity that Tarun is talking about. So don't go for guaranteed pension plan. Better than it is guaranteed annuity. So, what guaranteed annuity, let me just explain to you on a very simplistic basis, is you can choose that what is the income you want at the age of 60, 65 per month. And you can do a reverse calculation and you decide, ki, okay, this is the amount I need to invest to get that amount of income. So, these are very different plans than a guaranteed pension plan. See, a pension plan will give you a corpus on maturity, whereas you don't want a corpus, but you want a guaranteed income, which is going to be like a salary. These are
No, but
called
Sanjeev, I am
guaranteed.
talking about a product that we have, guaranteed pension goal plan, where you can do that as well. So it's not the corpus.
Okay,
You
so
can
it
do a
can do both.
guaranteed. Yes, so we are the only ones currently. We are expecting a barrage of products.
Yeah.
You should expect that the next 3 months, 4 months. So we are currently the market leaders in this. 15% of our product range is here. And we've actually opened up a new market. So my team, for example, I was going to start with that. thought ki Tarun, this is what segment we have hardly sold to this segment. This is a 50 plus segment, and this is what I was telling them. That is the time you have maximum money in your pocket, and that's the time most of your old liabilities are getting sorted out, and that's the time your quality of life is very high, and that's the time you're not going to have anything. So our deferred pension plan, you can actually do exactly that. This is guaranteed. It's not like the corpus and then you decide with that corpus. It's guaranteed all through. So maybe we should come and talk to you about this as well.
Yeah, sounds very exciting. And there's
It
a
opens up
question.
another market for distributors as well.
So is it done on a pension platform or is it done on a life insurance? So is it tax free or taxable? This
So
product.
like an annuity, it is taxable. But then this one takes care of no matter how long you live. And you have the income plans, which will be, of course, non-taxable.
So guys, there are two types of plan. One is the guaranteed income plans, which are made on the life insurance platform. So being on the life insurance platform, you're paying for a cost of life cover, which is 10 times of the premium minimum. So they become tax free. And then there is another, the pension plans are taxable, but then you can take a calculated decision. Okay, which is the one do I want to choose and why? Because at the end of the day, earlier we used to buy life insurance for ATC, but ATC today, everybody's ATC is done through their PF only, most of the people. So point is, today you're making an informed decision. So guaranteed pension will give you a taxable income, but it has its own advantages, is that you can have a better annuity and you can have look at other things, and you have to look at pre-tax, post-tax, what's going to be my tax bracket, what makes more sense for me than this thing. uh, yeah. And Madhusudan again is asking a question, tax and inflation, then we end up in negative returns. Not really, because some of these guaranteed annuity plans are giving up to 8-9% on a deferred annuity basis. So they are actually very attractive. 8-9% is not the real interest rate, but since you're deferring your uh, payments returns back, so the interest rate seems higher. Interest rates will always be 6-7% because that's the going interest rate in the market at which an insurance company can get their money out. So now going to the next question, and we have one of the people you will recognize, Mr. Anand Mahal, who's also watching the talk today, and he's
Okay.
asking that. Okay, that why doesn't Bajaj Allianz have more focus on term plans, which is the demand for clients? So I don't know. I thought your focus was on term, but coming in from a person who's a master underwriter himself and helps the most complicated term insurance cases happen in the country. So what is the Bajaj Allianz focus on term insurance, and what are your views on that?
So I am surely focused on term. It's a core risk that we cover. In fact, our latest tie-up with India Post talks about that because we are selling uh, that product. Uh, Today is a little bit of a conundrum for everybody to solve. So there has been the reinsurers have been changing the goalposts very often, Anand. As a result, the uh, underwriting guidelines have been all over the place, and because of COVID particularly. So, in fact, today our term plan among the top brands is the least costly plan. But my worry is that about 65-70% of it only gets issued because people have to go for medicals. They discover new things about themselves, which is good for them uh, in their own health. And the reinsurers have been asking for too much of documentation. As a result, things keep getting delayed and sometimes even expire in terms of the timeline that one may have for issuing policies. Uh, so, which is why while we are selling, I have taken a slight step back during COVID. We are talking to our insurers to get the best and the smoothest process for our customers, because there's no point spoiling your brand with, and that's what even bulk of the other companies have done. Uh, so, I should tell you, last year, the first wave of COVID, about 20% of my customers were term customers. But the second wave, it seems to have broken the back of a lot of reinsurers. Some have walked out, and some are threatening to. So we've got to be very careful, and because it's a promise that we have from our side to you, we want the entire process to be smoothed. So we are working on that, and that is surely a core offering that we have. Like we've been paying claims without asking much. Straight off here, we don't want customers to be inconvenienced by so much of documentation. So that is getting sorted out. Hopefully, by somewhere in Q4, we should be a lot better placed. So today, also about 6% of my policies are in term, but just 6%. It was 20% last year, largely because of reinsurers. It's one of my favorite plans, but I'm not talking about it right now because I can't sell you a dream which I cannot make it smooth for you to onboard on.
Yeah. So, guys, the point is that look, term insurance is very, very important. And as Tarun said, that it is actually a product that makes us very proud to sell. It's a very difficult product. The premiums are lower. And today, India's, even despite the premiums going up, they are very attractive compared to anywhere else in the world. And it's a very difficult amount of work that needs to do, and people like Anand who do a fantastic job on that. The point is, but to get a right cover by declaring whatever you have, whether you have diabetes, high blood pressure, or any other problem. And there's a comedian who does a comedy show, and he says, Indians are running after 20 and 50 rupees cashback from Paytm and others. The best way to get a free comprehensive health checkup is to apply for a term plan every year, and you get the most comprehensive health checkup done by an insurance company, and it's
Yeah,
absolutely
absolutely.
free on you, and where
Yeah,
you are saving 10-15,000 rupees a year. So guys, one is that when you go for a health insurance, you will get a comprehensive checkup, and but at the end of the day, there may be things that come out, but they can be underwritten, they can be declared, and there are always times. Right now it's difficult. When things with COVID settle down, it'll become easier. So I think that it's a process, but do definitely look at having and make sure you have a term plan. And Tarun has sold a lot of group term plans. So Tarun, please, I would like you to clarify to people that group insurance is not actually true insurance because it's very temporary. And this is somewhere I see so many people making mistakes where they're carrying a group health insurance plan or a group term plan and thinking I'm covered. So since you have led this business, please,
yeah,
I
yeah,
think
yeah.
it's our duty
Yeah, yeah.
to
So
rectify that.
group term, I agree with Sanjeev. Group term, group health, any group plan is, you're a party to that as long as you're party to the group. It's as simple as that. So if your employer is giving you a group term, or if you're getting it through, let's say, some people have started buying it from Paytm or some other place. If it's a group term plan, it is relevant as part of you as long as you're part of the group. The moment you leave that employer, it is not there for you. So don't assume that that is there. Similarly, today, when it comes to health, although we don't sell group health, I would always recommend you to get your own retail plan on health because you're not always going to be employed with the same employer, right? So, and then you will lose your group term or group health whenever you move somewhere else. So you should always have your own retail term plan, always have your retail health plan, despite whatever group plans you have. Always.
Yeah. Yeah. And it's important that please understand like a group, suppose there is a group called New Bank, it is come up with a group term plan for you. It is only valid for 1 year. Now, next year, it is up to them and the insurer whether they want to underwrite that plan or not. And this is what has happened that most, or at least during the pandemic this year, at least 50-60% of the group term plans would have gone for a toss because the rates quoted would have been so much higher. Whereas a individual product is controlled by IRDA, you have an insurance ombudsman to make sure you get the claim. Plus, the companies cannot change the rates once they have committed to a contract. So it's much better, and it is important for everyone to have an individual insurance. Even if your company is providing, great, it can be a top up or ask them to reimburse the amount and to buy it on your own. because that's the only way you will get a very good coverage. And I read the comment by Harsh. Thank you for being a regular reader to my Dainik Bhaskar. It makes my time worth it. And Rajendra Pandeyji has written a question that I am a Bajaj Capital client, and the 7% or 6-7% returns on products are better than the debt funds and FD. They actually are. And today I think that's where I feel proud about this industry. When you have 6.5% tax-free products, they are actually better than any company FD, much more safer, because these are secured. There is a guarantee of the shareholders here, whereas the company FD is a totally non-guaranteed product, or similarly with other products. So it's actually become a great product, and you must consider it as a part of your portfolio. So, Tarun, I know we are coming close to the end. So, any motivational thing you would like to tell our viewers today that I know I've not heard your motivation talks, but I hear from your team that you are a great motivational speaker and come up with some very innovative stories. So maybe just something for our viewers. I know I caught you off guard on this, but
Uh, I think a little bit you and I kind of mentioned uh, that this shall also pass is a fantastic set of words, which which is something that should let you feel that if it's a bad time, then it will always pass. There's a time limit even to a bad time, right? Uh, Even in Hindi movies, there's a time limit for a bad time. And also, this keeps you grounded when things will get very good. That this shall also pass. So it may not be always a great time, and hence keep your feet to the ground. Keep your feet to the ground, and humility is, I would say, one of the most important pieces. A lot of people get blown away by immediate success, medium success. They may have seen something that has come for themselves. And maybe I can understand today everybody's looking for endorsements because during COVID, it's been a time when everybody's had to get into their shell. And when you're coming out, you want endorsements. Fair enough. But let that feet remain on the ground so that your head, while it's held high, it's still grounded. That's my only little bit to you. The rest, I think, Sanjeev has been quite motivational himself.
No, that's very well said. I think it is also quoted in Gita that when you have gratitude, only then you get. So they're saying without gratitude, you can't get anything in life. And I think you have just reiterated it that be grounded, have gratitude, be humble. And I think it is very, very important that for us to be able to do these things, if they are easier than they sound. So, but it's very, very good. So, one final question, Tarun, is that there have been a lot of digital transformation at Bajaj Allianz. So, what has been this transformation? What can people expect from you? What is going to be the future?
Yeah. So see, we are committed to making things easy for our customers. I think that's the word ease. Easy is what we are talking about. And when I say easy, I've used it in a digital format. Also, let me talk about it. The word easy for me stands with E for efficiency. It develops a lot of so you'll see a lot of investment from us going into making efficient processes for the customers so that you can easily get onboarded. Which will also, by the way, efficiency will bring down the cost. Hence, there is more for the customer to take, and the guarantee can be the little 0.1, 0.2 better. The A and S stands for accessibility, simple, and secure. So I think that's so. I believe in anytime insurance. If you believe 2 o'clock in the morning, you suddenly feel that you got up and you said, maybe I should have bought it, or you went somewhere and you feel that there is a need. There could be some things in ULIPs that you like because suddenly if markets are looking whatever, good or bad, to you and you want to take benefit of a certain situation, you should. And that's what the simple product, simple onboarding, but secure at the same time. Because Sanjeev also mentioned that financial services is a lot of fraud also happening. So all this should be available and should be easily accessible. And the why for me is the U, which is it should be personalized. Whatever you today, Amazon or a Netflix can give you a personalized product. There's this joke going around that if somebody bought a stool, then Amazon said, hey, there is a rope if you want it. Right? So that's personalized. I mean, I know that's a very bad joke, but so it's so personalized. And the personalization will happen because of use of data. And you'll see us investing in a lot of data. We have a sister company, BFL, who's excelled in data. And we are trying to play catch up, but I promise someday we will, and maybe we'll also teach some lessons to everybody here and there. So on data, on digital, on accessibility, with a purpose. And the other bit is I believe in a lot of tech innovation, but when you will see innovation coming from us, it will not be for getting awards. They may get awards. That's a different matter. It'll be contextual. I always say innovation has got to be to the context. So, for example, Sanjeev, when COVID was happening, I went to my team and said, it's very difficult. How do we work on somewhere where you can meet without really physically meeting? And I have an innovation team, and they just went into things and said, so we can do co-browsing. And normally co-browsing is done, when you are onto a website, somebody is kind of co-browsing with you. Here we did browsing when an agent, when he's filling up a form, could do co-browsing. You could do co-browsing. Because agent knows how to fill the difficult form. So we call this offering Smart Assist. And last year, one of the reasons, Sanjeev, you said that we were growth oriented. 48% of my customer onboarding had happened through Smart Assist. It was contextual. Yeah, so it was and we had Ayushman Khurana talking about it as well. The whole thing was Bina Milke Milna. And that is what it allowed. So you and I could, today we can talk through this. 2 years back, we never thought we'd meeting like this, right? So similarly, in my app, you can go ahead and buy, and I can co-browse with you, and I can help you. Ki sir, aise bhariye, ye theek nahi hai, health ka ye tick kijiye, and things like that. And that is what we did. So my advisors could meet 5 meters, 500 meters, 500 kilometers away. A lot of NRIs actually came in like that as well, where the context of innovation was to solve for the problem of distance, keeping distance, social distancing, and still being able to fill up forms. So you will see a lot of contextual innovation coming from it. I've just gotten started, if you may. I can carry on, and I'm so particularly excited about the stuff we're doing. We're working with a lot of fintechs, by the way, and there is learning from every fintech that we get. And fintechs in India, which is why I always believe in the startup culture in India as well. When the agility with which they move, the decision making, the willing to take risk, the willingness to move things around and align with you, which large companies better watch out.
Yeah, that's true. I fully agree with you. We are in a very exciting area, exciting world. We're going to see a lot of innovation around. And we are out of time. But one, Nikhil, you have asked a question that I'm 43-year-old, have a few lakh, where to invest, mutual fund or guaranteed income. You need to do a combination of both. As we have always said, see, your portfolio needs to be diversified. So, it is, I would definitely recommend talk to one of the wealth managers at Bajaj Capital or anywhere else. But do take a combination of both. Equity itself is amazing. India has an amazing story ahead for the next 10 years. So you must be there. So mutual funds can offer you a great option. Similarly, guaranteed income plan gives you the security of a guaranteed growth with life cover. And plus you must add a supplement with a health insurance and a life insurance, which is a term plan. So this is something that you must have. With that, thank you, Tarun, for taking out time. Thank you, everyone, for joining us today. Great having you, and look forward to seeing you in the next episode of FINtastic Talk. Our next episode is a very interesting one. We have Morgan Housel with us. He's written one of the most exciting books that I have ever read on money, called The Psychology of Money. And we have him joining us. One of the additional roles he plays, he's the CEO of the collaborative, he heads the collaborative fund at Motley Fool. So, guys, we look forward to having you with us. Thank you, everyone. Thanks for joining.
I'll just show you. I have the book, by the way. This is not
superb.
my Psychology of Money. I actually have it on me. So yeah, it must be a great guy.
Yeah. Well, so it's a superb this thing, and thank you everyone for joining today, and we look forward to having you with us in the future episodes. And if you have any question, anything, please do write. We'll make sure everything gets answered. Thank you, everyone.
Thank you.